Good afternoon, ladies and gentlemen, and welcome to the Hurricane Energy PLC interim results investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. There's a text box at the bottom. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, I'd like to submit the following poll. And I'd now like to hand over, please, to Anthony Maris, CEO, Richard Schaaf, CFO, Beverly Smith, NED, and Philip Corbett, Head of IR at Hurricane. Good afternoon.
Good afternoon, Mark. Thank you, and thank you to everyone who is joining us on what is a difficult day for Hurricane and its shareholders. The management team is about to take you through the presentation, which was originally presented on the webcast at 9 a.m. this morning. Apologies for the repetition for anybody who's listening to both, but we are aware that a number of our shareholders were not able to dial into that call this morning, and it's very important to us that our private retail investors are able to share in the same communication that analysts and institutional investors receive. As Mark said, after the presentation, we will answer questions which have been pre-submitted through the Investor Meet Company portal. And again, as Mark said, we will do our very best to answer as many questions as we're able to in the time allowed. So with that, I will hand over to Beverly Smith to start the presentation.
Good afternoon, everyone. I'm sure all of you will have now seen our interim results announcement this morning, and no doubt will have been surprised and disappointed at the scale of the reserves and resource downgrade on the Lancaster field. The aim of today's presentation is to help you understand how we arrived at this difficult conclusion, as well as the further technical work needed in order to evaluate potential options to help mitigate the declining production from the Lancaster field. But before I cover the conclusions of the technical review, let me briefly cover the key points from the first half of the year on slide 4. The Lancaster EPS produced an average of 14,600 barrels of oil per day in the first half of the year, an increase of 7% on the second half of 2019, although lower than anticipated, primarily as the Lancaster 7Z well was temporarily shut in at the end of May. I'm pleased to say that from an operations standpoint, the Akamaizu continued its trend of excellent uptime, averaging 99% in the first half and 96% since production commenced in May 2019. We generated revenues of $81.9 million from 7 liftings of Lancaster crude in the first half, delivering an average realization of approximately $30 per barrel. Low-cost production costs of $18 per barrel ensured that we generated positive cash flow in the period. However, the significant non-cash asset impairments that we have recognised due to the Lancaster reserves downgrade and a reduction in future oil price expectations resulted in a loss of $308 million for the period. At the end of the first half, Hurricane had a healthy liquidity position of $106 million in the form of net free cash. The reduced expectations for Lancaster production, as well as lower oil prices due to the COVID pandemic, will impact future expected cash flows for the business. As a result, we've announced today that the company will seek to engage with its key stakeholders regarding its forward work programme, capital allocation and financing arrangements. Finally, given the growing focus on ESG in the investment process and the broader sustainability agenda, we were pleased to publish our first detailed ESG report in April. Hurricane remains fully committed to reducing its greenhouse gas emissions where it is economically and commercially viable to do so, and fully supports Oil and Gas UK's commitment for a net zero basin by 2050. If we can now go to slide 6, where I'll begin the summary of the results of the technical review to date. Let me start by reminding everyone that we're dealing with a unique and challenging reservoir that was always subject to great uncertainty and where data acquisition has long been problematic. Since we started this process on the 8th of June, we've strengthened the subsurface technical team with a mixture of new hires and consultants, all of whom have fractured reservoir experience and some have fractured basement experience, including in the west of Shetland, UKCS. We have analysed all the new data from the early production system and revisited all the appraisal and exploration wells in the area to integrate into a coherent picture that's consistent with our regional understanding. So if we go to slide 7, there have been profound changes to the Lancaster geological model, including a shallower oil-water contact and potential additional reservoirs. The new model has, however, resulted in significant reductions in reserves and resources that reflect the earlier water production and more rapid pressure declines that have been seen. The key conclusions of the technical review are as follows. The Lancaster oil-water contact is estimated at 1330 TBD subsea. This reflects the structural spill at base seal. We believe the Mesozoic sands on the flanks of Lancaster to be in pressure communication with the field, and hence structural spill is defined by the seal on the top of those sands. The sands are not present everywhere on the crest of Lancaster, and hence at some point base seal and top basement are one and the same. Just over a million barrels of water have been produced to date. It is highly unlikely for perched water to be the source of such a large volume of water, and material balance work suggests it would require more water than can be held in the structure above the wellbores. We see water coning from the aquifer below in the Lancaster 205-21A6 well, or P6 well, and oil coning from above in the Lancaster 205-21A7Z well, or the P7Z well. The material balance work shows more pressure support than would be expected using the volume of basement oil above 1330 metres TBD subsea and a credible aquifer. The additional pressure support would need to be supplied by a combination of any of the following variables: a larger or more porous basement aquifer, additional reservoirs or aquifers, compaction of porous reservoirs, and free gas. This suggests a more complex reservoir system than previously anticipated. The downhole gauges in the 205-21A14 well at Lincoln show a 20 psi depletion, almost certainly from Lancaster production, suggesting good lateral connectivity in the reservoir. Oil in the sandstones on the flanks of the Lancaster field have been seen in the appraisal wells drilled to date and were logged using the production logging tool during the drill stem test of the 205-21A7 well. Both the material balance and the pressure transient analysis from test data from the offset wells suggest there is a real opportunity in these reservoirs at Lancaster. If we could go to slide 8, please. Cumulative oil production from the EPS until the 1st of September was 6.6 million barrels, with 69% of the oil coming from the P6 well. It's a different story for water, with just over 1 million barrels having been produced, with 77% coming from the P7Z well, the deeper of the two wells. P7Z dips down through the reservoir section, with the end or toe of the well being at a depth of 1329 metres TBD subsea, or 1 metre above the new oil-water contact. In August, the P6 well averaged 12,826 barrels of oil per day, with an average water cut of 15%. The P7Z well has been shut in since early August. If we could go to slide 9, please. Slide 9 provides the comparison of oil and water production allocated by well, and the relative contributions of the two wells, as discussed previously, are clear. Note at the end of July and early August, P7Z was flowing with in excess of 50% water. P7Z was not restarted after the August shutdown, whilst we investigate potential voidage issues. Forward production guidance is 12,000 to 14,000 barrels of oil per day until the end of the year, assuming a 95% operational efficiency. Excuse me, if we could go to slide 10, please. We'll now look at the evidence for a shallower oil-water contact. Oil, gas and water have different pressure gradients, and pressure data is usually the most accurate way to determine a contact. However, pressure data is notoriously difficult to collect in fractured reservoirs, and interpretation can be problematic. At Lancaster, we have pressure data widely spaced over quite a large depth range, it's around 600 metres. But the data does line up into a convincing aquifer gradient. The gradient is slightly overpressured compared to a hydrostatic or a normally pressured water gradient, but this is not inconsistent with the other well data in the area, as shown in the second plot. Released well data from the Clare field also shows similar levels of overpressure. The 2017 CPR used a hydrostatic water gradient for Lancaster, but if the slightly overpressured water gradient is used with updated density assumptions from production data, then the intersection of the oil and aquifer gradients is at 1330 metres TBD sub C. This is supported by work undertaken by a respected third-party expert who recorded a range from 1320 to 1340 metres TBD sub C. And on slide 11, while pressure data is usually regarded as the most important source of data to derive an oil-water contact, log and sampled data would then be regarded as important supporting evidence. Log data in fractured basement is very difficult to use for this purpose, but we do have some samples taken either with the pressure samples by pumping fluids from the wall of the borehole, or as wireline samples by collecting fluids present in the borehole itself. These samples also support an oil-water contact at around 1330 metres TBD sub C, as there is a clear drop-off in the amount of oil present in samples below this depth. This data has all been reviewed again and third-party experts consulted to confirm the interpretation of the fluid analyzers in samples not brought to surface. Fluids recovered below 1330 metres TBD sub C were in excess of 90% water, which was a mix of formation water and drilling brine. If we go to slide 12, we can see a west-east seismic line through the Lancaster field and shows the presence of the Mesozoic sandstones in yellow. This line is from our recently reprocessed seismic volume, and although we've not finished mapping the Mesozoic sandstones in detail, we have been able to map base seal, which for much of the Lancaster field is the top of this clastic interval. The spill point is controlled by the base seal structure, and this is very close to 1330 metres TBD sub C on the new mapping. It's actually around 1340, so it's certainly within the error bars. The slide also shows the P6 well poking its toe into the sandstones at the end of the well. On slide 13, we can see that we've had around 120 psi pressure depletion at Lancaster since the start of production, and that fall in pressure has been more rapid than predicted pre-start of production and consistent with a smaller volume of oil in place. Interestingly though, it's higher than would be expected from oil in basement alone above 1330 metres TBD sub C with a credible aquifer. The plot also shows a change in gradient after around 1.5 million barrels of voidage, and again at just over 6 million barrels, which can indicate different reservoir compartments or even different reservoirs starting to contribute. Excuse me. We know there is oil in the Mesozoic sandstones that onlap the Lancaster structure. We are now having to model a complex reservoir system with energy provided by a combination of the expansion of oil in place in the basement and the Mesozoic sandstones, aquifer influx from below and also from the Mesozoic on the flanks, compression of the Mesozoic reservoirs on the flanks, and a developing secondary gas cap. It is a lot more complicated than had been considered pre-production. And to that end, the EPS has done its job because the dynamic data has been key to understanding the field. If we go to slide 14, oil in the Mesozoic sandstones was known before first production. Both the Victory and Rona sandstones are covered in the 2017 CPR. The reprocessed seismic volume is enabling us to map this interval more confidently than we were able to previously. We have also gone back and reviewed some of the appraisal well test data. 205-21A7 was tested across this interval, and a production logging tool was run to look at the contribution of different zones to the overall flow rate. The plot shows two key flow zones, one of which is the Victory sandstone and the other is the basement. The Victory had a maximum flow rate of almost 6,500 barrels a day from a 4.4 metre zone, and the lower Cretaceous sandstones are known to have high permeabilities from the Clare field to the northeast. The total thickness of Victory in this well was in excess of 28 metres, but most of it was behind casing and hence not tested. As mentioned previously, the other reservoir in the area is the older Jurassic-aged Rona sandstone, seen in the toe of the P6 well. The P6 well is interpreted to have penetrated the Rona and then the Kimmeridge clay, and then it appears to have returned to sands, which may be the lower Cretaceous Victory sands, but there is not log data over this part of the well, unfortunately. Slide 15 shows the unaudited EPS recoverable reserve numbers for Lancaster, and they range from 14.3 to 17.7 million barrels. No economic limit test has been applied to these numbers. They are to provide you with our current ranges. The 2P number for reserves remaining, given 6.6 million barrels produced to date at the end of September 2020, at the start of September 2020, is 9.4 million barrels. For contingent resources, we've used a range of cases. These numbers are also unaudited and should be considered as indicative until a new CPR is available in Q1 next year. The range of contingent resources is from 26 to 90 million barrels. Water injection appears the most likely production enhancement mechanism, and this and others are still under review. There remains significant upside for Hurricane stakeholders. On slide 16, the connectivity within the basement of Mesozoic sandstone reservoir group appears good, as we have seen 20 psi depletion in the gauges at the 205-26B-14 Lincoln well, some 8 kilometres away from the producing wells. Lancaster production is the most likely source for this depletion, and as part of the future work programme, we will look for evidence of the recent shut-in order to confirm that the cause is Lancaster. The pressure data can only be retrieved by sending a boat over, and the process can take a few days to complete. If and when Lancaster is confirmed as the cause, it would indicate a probable lack of seal at the Bryn Hills fault, which in turn would make structural closure the most likely control for the oil-water contacts at both Lincoln and Warwick. The map shows the previous fault-controlled oil-water contacts. Although the technical review is not complete, significant progress has been made in our understanding of the Lancaster field, and a huge amount of high-quality technical work undertaken. We intend to complete this period of work by the end of the year with a recommendation for the future work programme. Now I'll hand you over to Richard, who will take you through the financial review.
Thank you very much, Beverly. Following on from the technical update, I will now take you through a summary of the financials for the first half of the year. Turning to slide 18, revenue for the period was $81.9 million, derived from 7 liftings. As you'll be aware, the dated Brent price has been incredibly volatile during the period, averaging just over $40 per barrel. Hurricane achieved an average net back price, after transportation costs and discounts, of just under $30 per barrel. This $10 average difference was, in the most part, the result of the contractual pricing arrangement we have with BP, which prices the cargoes based on either the first or last 5 days of the month it is lifted. Cash production costs were just over $18 per barrel. This gave rise to operating cash inflows of $21.9 million, demonstrating the ongoing cash-generating potential of the Lancaster field, even during a low and highly volatile oil price environment. Following the technical review and the adjustments to the reserves for the Lancaster field, combined with a lower oil price, the company has recognised a total impairment charge of $251 million. During the period, the company incurred $36 million in CapEx costs. These largely related to costs that were already committed to in 2019 and were, for the most part, connected with activity associated with the Greater Warwick area. Following the drop in oil price, the company initiated a capital allocation framework focusing on minimising capital expenditure and maintaining its cash balance. At the end of June 2020, the company had over $100 million of net free cash. This is the amount of unrestricted cash available for use by the company after having adjusted for any current debtors or creditors. Turning to slide 19, shown here is the production and OPEX guidance for H2 2020. As you'll have seen in this morning's RNS, we are forecasting production of 12 to 14,000 barrels of oil per day after adjusting for operational downtime for the period September to December. This includes the impact of the annual maintenance shutdown that has recently finished. This gives an overall average for the second half of the year to be between 12,800 and 14,200 barrels of oil per day. Based on this forecast, our OPEX cost per barrel will be $22 to $24 per barrel, depending on where we sit within our production range. This is slightly above the first half of the year, with the increase partly due to an increase in the revenue tariffs due as a result of the higher oil prices. Assuming that the oil price stays around or above current levels, this will result in a healthy operating cash flow for the second half of the year. As previously reported, the company has put in place a put option for 1.8 million barrels for the 6 months July to December, with a strike price of just over $35. Whilst we clearly hope that prices will not fall back below these levels, this essentially provides us with some insurance against that scenario, whilst still receiving the full benefit of any upside in pricing. Moving on to slide 20. We will now look at the cash outlook for 2020. As stated in the Capital Markets Day in April, the company had a number of areas of committed capital expenditure. These primarily related to the completion and storage of various long lead items connected with a potential GWA tieback and gas export equipment. In addition to this, there were the requirements to P&A the Lincoln well in 2020, along with the Lincoln commitment well. As previously announced, the deadlines to P&A the Lincoln well and drill the Lincoln commitment well have been moved to June 2021 and June 2022 respectively, pushing out these capital costs significantly. Clearly, the cash flow in the second half of the year will be impacted by a number of areas. As you would expect, production levels and oil price are key. The prices compared to Brent, excluding transportation costs, that we have been seeing so far in the second half of the year had all been sold at a premium to Brent. This is driven by our growing reputation as a reliable producer, delivering cargoes on spec and on time. H2 2020 will see the finalisation of the build-out of the long lead items and their move to storage, ready for future use as required. The total expected capital expenditure in H2 2020 on these and other items is expected to be $19 million. Under our contractual arrangement for the Akwa, we are required to hold certain amounts of cash in escrow. This amount changes over time in line with the contract, thus impacting on net free balance. In addition, whilst we currently do not hold any cash in escrow in relation to our Lancaster EPS decommissioning liabilities, there remains the possibility that in the future we might be required to provide the security in cash. If this was the case, we would need to move up to $36 million from unrestricted to restricted cash. Turning to slide 21. Hurricane Management and the board continues to maintain a very disciplined approach to capital allocation. We see the capital requirement being threefold in nature. Firstly, we aim to ensure that we maintain business continuity with regard to the operation of the vessel, G&A costs, and the payment of the coupon on the bond. Management are continuously working to identify areas of cost saving in both OPEX and G&A to ensure the business is run safely but as economically as possible. Secondly, we must ensure that we maintain our license to operate by fulfilling our license obligations. In light of the revised interpretation of the oil-water contact, the area of the P1368 central license outside the determined Lancaster field area is being voluntarily relinquished, and following the relinquishment, the company will be released of its obligation to drill the Lancaster commitment well. This removes an estimated $40 million from our longer-term capital commitments. The remaining license commitments include the GWA commitment well on Lincoln, along with the requirement to P&A the existing Lincoln well. Thirdly is our license to invest. This is our focus on ensuring our free cash is invested in the most appropriate way to generate the maximum value overall. As discussed by Beverly earlier, following the technical work that has been carried out over the last 3 months, the company is now evaluating the way forward. This is to ensure continued production through the Akamazoo, combined with the unlocking of the resources contained within the Lancaster field and our neighbouring Rona Ridge assets. The current most likely next step is a water injector on Lancaster. However, this work is still preliminary and has not yet been sanctioned. The estimated cost shown here of $70 to $80 million should be considered to be indicative at this stage. As we consider our next steps, we will be engaging with our key stakeholders over the coming weeks and months regarding the most appropriate way to maximise the significant value that still exists within our Rona Ridge assets. I will now hand over to Anthony Maris, our new CEO, to wrap up.
Thank you, Richard, and good afternoon, everyone. Despite the nature of the disclosures we've made today on Lancaster, I firmly believe that Hurricane can look forward with positivity around the potential of our west of Shetland acreage. We still have much work to do, but we have identified real potential in the overlapping Mesozoic sands, and there is a robust technical case to provide pressure support in the basement of the reservoir from water injection. We should also not forget the value of the significant installed infrastructure base west of Shetland. We're working hard on these plans and will provide further updates before the end of the year. Similarly, we are upbeat on the prospects of a potential development in Lincoln and continue to work with our partner Spirit on potential appraisal and development activity to advance commerciality of this discovery. Importantly, we have removed a significant capital obligation with the release of the Lancaster well obligation and will continue to exercise capital discipline. All of this activity needs a strong balance sheet, and it is our intention to engage with all our key stakeholders on the forward work program, capital allocation, and financing arrangements. And now I hand back to Phil.
Thank you, Phil. But before I guess we hand into the Q&A, I'd just like to remind ladies and gentlemen that they can continue to submit questions at any time using the Q&A tab situated on the right-hand corner of the screen. And I'd also like to remind investors attending today, that some of whom may have come in slightly after the meeting started, that a copy of this, a recording of this presentation, along with a copy of the slides and the published Q&A, will be available via your Investor Meet company dashboard. Additionally, I'd like to remind you that feedback is important. Immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can understand your views and expectations. And I think finally, before I hand back to the team from Hurricane, I'd like to address both the pre-submitted questions and those submitted during the live event. But just given the significant number of investors attending today's presentation, I'd just like to remind you that the company will not be in a position to answer every question it's received during the meeting itself, but of course we'll be able to review all questions post the event as well. So Phil, if I may hand back to you, and just to remind you that of course investors can't see any questions that have been submitted, so if you could read them out before directing them, that would be great. Thank you once again.
Thank you, Mark. So what we plan to do here is to firstly address the questions that have been pre-submitted through the portal over the past couple of weeks ahead of this call, and then after we have run through those, we will take the questions that have been submitted on the call live. Firstly, I would say that there are a number of pre-submitted questions around the oil-water contact at Lancaster. I believe that Beverly, in her prepared remarks, has already explained the revision in the oil-water contact on Lancaster. However, if there are any follow-up questions that anybody on the call wish to ask, then please can you pose those through the live Q&A, and we will take those a little bit later on. Moving on, a number of the other questions that we have received on a pre-submitted basis were around the convertible bond, and how we aim to address that convertible bond maturity in July 2022. So I think Richard already addressed this to a certain extent in his prepared remarks, but maybe I can just hand over to him and he can give a little bit more update on our thinking about the maturity of that bond.
Yes, thank you, Phil. So, as already mentioned in the technical review, we believe there is still significant value within Lancaster and the Rona Ridge assets, and therefore it makes sense to work out the best way to extract that value. As such, we are looking at the most appropriate operational approach, which at this stage is looking like it's most likely will be a water injector well, but that work is ongoing, and we will come back to the market and update you later this year on our conclusions regard to that. Running in parallel with that, we will also be engaging with our key stakeholders, including our bondholders, about the way forward and the financing structure to make sure that we maximise the value for all stakeholders, equity and bondholders alike. Great.
Thank you, Richard. Okay, so moving on to another set of pre-submitted questions revolved around, are there any plans to dilute the shares or to raise equity? So maybe I can just hand that over to Richard.
Very simply, in response to that, we currently have no plans to issue equity.
Thank you, Richard. Moving to the next question. Has the company any plans or intentions to leave the AIM market and to apply for a main listing? And if so, what is the likely time frame for this?
So whilst a little while back we did state that this was an area that we were looking at and considering, certainly for the time being, that has moved significantly down the agenda and it is not a focus at this time.
Thank you, Richard. Moving to the next question for Beverly. What evidence points to the wells only producing from a short section in the heel of the well? I think maybe, Beverly, this is just a question asking around you, what is our updated interpretation about where the wells are producing?
Yeah, the production wells are actually completed open hole, so there's no monitoring technology in the wells. I think with horizontal and deviated wells, the maximum drawdown is in the heel. So when you start production from those wells, you would expect production to start at the heel. If you don't have any monitoring equipment, there's really no way of knowing at what point other contributions are made further along the well bore. The history matching that we're doing at the moment, obviously using industry standard tools, suggests that most of the well bores are now contributing to flow, although obviously only from certain discrete fractures.
Okay, thank you, Beverly. We have another question here on the technical side. Would depletion of the Lancaster field present a risk to infill drilling as the mud window gets narrower at lower reservoir pressure?
It requires, I mean, it's a good question because it does require more planning, but no, at the moment it's nothing that's not drillable. So as long as we take it into account when we plan, there's no reason why we can't deliver more wells.
Thank you. The next question, this one to Richard. How long does the company expect to sustain profitable production from Lancaster without infill drilling or well interventions?
Today we've given production guidance for September to December for this year, and based on our operating cost assumptions and that the oil price stays at or above its current levels, this will result in healthy operating cash flow for the second half of this year. As we move through into Q4 and later in Q4, we'll provide updated guidance for production guidance for 2021.
Thank you, Richard. Another question for Beverley. Is there evidence of reservoir properties degrading with depth from the vertical wells on Lancaster? Is there a particular degrading below structural closure?
Yeah, that's another good question. Yes, we think there probably is. When you look back through the old DFT data, we actually flow very little water from below structural closure. So I think there is some qualitative evidence that we see degradation. But we've started to go back and look at the log data as well, particularly at some of the acoustic logs, and there is definitely a suggestion there that the reservoir quality degrades in the aquifer. When we do the history match, we find that the only way that we can make basement oil match the material balance is if we have a large aquifer attached and an aquifer with the same reservoir quality as the oil reservoir above it. We think that's probably unlikely, given what I've just said to you, and it also fails to match the response of the P7Z well. So 7Z, when it comes on after a shut-in, comes on producing a lot of water, and that water reduces as you pull the well harder. And what we show now in the simulator is that is as a result of coning oil. So when you pull that well hard, you cone oil from above, and that's what reduces the amount of water. You don't see that in a well that has a strong bottom aquifer. You have to have the aquifer on the flank. So I think there's several lines of evidence that, and they're not conclusive, so it remains a possibility that the aquifer has just as good a reservoir quality as the oil leg. But at the moment, our feeling is that it's probably degraded. Thank you, Beverley.
Next question related to one that was already asked, but we'll deal with it anyway, is it still a desire to obtain a premium listing?
As previously said, not this time.
Thank you, Richard. Next question. Is gas export still on the cards for this year? And is the cost of $22 million realistic? Richard, would you like to take that?
So at the moment, our focus is on the next step for Lancaster. And as we said, it's understanding the best way to manage the reservoir. And our focus here is on looking at water injection. And the water injection plan would not require gas injection. Would not require gas export. Apologies.
Thank you, Richard. Next question. Are Hurricane prioritising further production wells in the Lancaster field? If so, would this mean that Lincoln and Halifax fields appraisal and development may need to be delayed, for a year or two?
Clearly, we need to do things in an appropriate order. Our first task is to maintain and manage our production, because that's the lifeblood and the cash flow for the company. So clearly, yes, the activity on Lancaster will be prioritised. However, we continue to work with both our JV partner, Spirit, and with the OGA on the most appropriate and right next steps for the Lincoln field. And we will also be looking at the technical data work that we've done on Lancaster and applying that across onto Lincoln and Halifax in due course, so we can benefit from the wider understanding across the Rona Ridge.
Thank you, Richard. Next question. Can the company clarify the conditions of the existing flaring consent? and advise what actions are being or need to be taken in order to obtain an extension to the flaring consent until such time as a gas export solution is in place? Thank you.
The Akamizu production is limited to the production consent, which is an average of 20,000 barrels of oil per day, and this basically informs the flare consent. Flaring consent is limited to the environmental statement, and so we're in contact with both the OGA and BEIS on this point. I think the next renewal is due in October.
Thank you, Beverly. Okay, those are that is the end of the pre-submitted questions that we are able to answer at this time. So now I'm going to turn our attention to the Q&A that has been posted since we started this call. The first question: what is the current status of the P2294 and P2308 Warwick and Halifax? And what is your expectation for those licenses over the next 2 to 3 years?
So I think that question was partly addressed by my previous answer. As I say, we're focusing on Lancaster at the moment. We certainly aren't forgetting about either of those two licenses, as they both could have potential. So we will be doing our technical work and extending that across onto those licenses over in the future, and evaluating what the best next steps are for those, bearing in mind obviously various financial capital constraints.
Thank you, Richard. Next question, and perhaps I might pass this to Anthony, if I may. We have had a lot of negative news and issues. Is there much in the way of catalyst and/or value in the future for shareholders?
Yes, I think there is. I think we have to remember that as an organisation, we have a producing asset in the West of Shetlands with an excellently performing piece of infrastructure. Whilst we have announced reduction in our reserves and resources, those reserves and resources are all nearby the existing infrastructure, which does help maintain a concept of lower cost development. We also have a technical, robust planning process going forward that is focusing on being able to transfer the resources across to reserves in the short term. So I think on balance, that outlook there gives us a near-term positive outlook. We have Lincoln, Warwick, where we potentially can have significant development potential in the future. So that gives us slightly medium and long-term potential for the company as well.
Thank you, Anthony. The next question, perhaps I'll pass this one to Beverly. Does the revised forecasted reserves include the hydrocarbons in the sandstones on the flanks?
Yes, it does, because we see no seal between the basement and those sandstones. We see from the pressure data that they're in pressure communication. So there is no reason why the existing wells would not see those sandstones, particularly as the sixth well actually has its toe in them at the end of the well. So we are seeing in our model at the moment, the production that we are having at the present day, we see as a contribution of basement and Mesozoic production.
Thank you, Beverly. The next question, perhaps I will pass this one to Richard. Is the company continuing to be open to the notion of any farm-ins?
Absolutely. So again, coming back to the work we have done on Lancaster and establishing that there is still a significant value there, the option for a farm-in to assist with funding future activities certainly remains on the cards, and it's one of the ways forward that we're looking at as we move forward.
Thank you, Richard. Next question. very similar to the question that we had on the sands, but this time, what percentage of the 2C resources at Lancaster do you expect to recover using the water injection method?
Oh, that's a good question. I don't have that number broken out in front of me. I think it would probably be. It's difficult for me to say. Can I?
You can always put a response post the presentation. That question will be available for you.
Can we come back on that question after
Absolutely,
the presentation?
of course, no problem.
Thank you. Just bear with me for 1 second while I look at the questions.
Of course, and I'll just step in for a second, Philip, just to give you time, because clearly, just given, as I said earlier, the number of investors that are on the call, there are a considerable number of questions for the company to acknowledge and try and select the questions where they can.
Phil, the answer to the last question is it's around 30%.
Okay. Thank you, Beverly, and thank you, Mark, for stepping in there for a second. Next question. What is the present state of the GWA joint venture? Perhaps, Richard, would you like to address that?
So the present state is ourselves and Spirit continue to work very closely together. We share sort of technical data and understanding, and we are looking at what the right next steps are for both Lincoln and Warwick. Clearly, Lincoln is further advanced than Warwick is, so that's probably the primary focus. But as a joint venture, we are looking at both of those assets to work out how best to move forward with them and what the right activity is to do next.
Thank you, Richard. So I think that we have now come to the end of the questions that we are able to answer, both in terms of the pre-submitted questions and also those which have been submitted live today. So perhaps I can back to Mark.
Yeah, thank you very much indeed. And as we highlighted earlier, all these questions will be there. So if we did miss any, then of course there is the opportunity to look at those at the appropriate time. I guess I know that when we spoke that investor feedback is particularly important. So obviously shortly I will direct investors to do that. Ahead of that, I don't know if you guys would like just to wrap up, and then as I say, I will direct investors so they can give you feedback.
Sure. So I would just like to say thank you to everybody who has taken the time to listen in this afternoon, and thank you for your ongoing interest in Hurricane. We appreciate all of your interest, and we know it's been a very difficult day, and for many people and many investors in the company. So we do appreciate you listening in this afternoon, and please feel free, if there are any other questions, to get in contact with us at our email address, communications@hurricaneenergy.com.
That's brilliant. Thank you. Anthony, Richard, Beverly, Philip, thank you very much for updating individual investors today as part of your roadshow, giving them the ability to get the clarity, hopefully, that this is provided. Could I ask investors, please, not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback. If you access this meeting via our website, the feedback page will appear. If you access via the link we sent to you in the email, you'll be asked to log back in. It takes a few seconds, but it would be very much appreciated if you could. On behalf of Hurricane and Investor Meet Company, we'd like to thank you for attending today's presentation. That now concludes today's session. Good afternoon to everybody. Thank you.